Based on the provided data, Bitcoin appears to be consolidating within a range with support around $95,600 and resistance at $97,600. The historical price action shows a slight upward trend, but the recent forecast suggests a period of sideways movement. Considering these factors, a neutral to slightly bullish strategy is recommended. A long position could be initiated if the price breaks above the resistance level of $97,600, with an entry price at $97,650. The stop-loss order should be placed below the recent swing low at $95,600, while the target price could be set at $98,800, aiming for a potential 1.2% return. Alternatively, if the RSI dips below $40 and the price approaches the support level of $95,600, a short position could be considered with an entry price at $95,650, a stop-loss at $96,200, and a target price at $94,800, aiming for a potential 1% return. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further drops. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential for a breakout in either direction, but the overall trend favors a downward move. Considering these factors, a bearish strategy is recommended. Enter a short position at the current market price, which is around $316. Set a stop-loss order at $322, slightly above the recent support level, to limit potential losses. A target price of $305 is suggested, based on the forecast data and the potential for a further decline. This strategy leverages the downtrend and the bearish indicators to capitalize on a potential price drop. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator, while showing some fluctuations, remains below $50, suggesting bearish sentiment. The Bollinger Bands, with prices consistently below the middle band, further support the downtrend analysis. Given this analysis, a bearish strategy is recommended. Enter a short position at the market price when it breaks below the support level of $0.874. Set a stop-loss order at $0.899 to limit potential losses. The target price for this trade could be $0.747, based on the forecast data and the lower Bollinger Band. This strategy aims to capitalize on the downtrend and profit from the predicted price decline. Remember, trading involves risk, and this is just a suggestion based on the available information. Based on the provided data, Ethereum appears to be in a slightly bullish trend. While the price has fluctuated within a defined range, there's a general upward movement over the past 2 weeks. The RSI indicates the asset is not overbought, suggesting further potential for upside. Considering these factors, a long position could be initiated. A suitable entry price would be around $2,630, with a stop-loss placed at $2,590 to protect against a potential reversal. The target price could be set at $2,740, which represents the recent resistance level. The RSI strategy suggests a buy signal as the RSI is currently below $30. However, the Bollinger Bands indicate a potential pullback as the price is approaching the upper band. Combining these signals, a more conservative approach would be to wait for a pullback towards the middle band before entering a long position. This would provide a better risk-reward ratio and reduce the potential for losses. Based on the provided data, a bullish trend is evident in XRP. The price has been consistently increasing, supported by a strong support level at $2.39 and overcoming the resistance at $2.76. The forecast data also suggests a continuation of this upward trend. Therefore, a long position is recommended with an entry price around $2.60. The stop-loss should be placed at $2.39, protecting against a potential reversal. The target price can be set at $2.80, aiming for a $7.7% return. This strategy leverages the upward momentum and supports the bullish outlook for XRP. Based on the provided data, Binance Coin shows an upward trend with support around $647 and resistance around $674. The forecast prices suggest a continued upward movement, with potential for consolidation around $650. Considering these factors, a potential strategy could involve buying Binance Coin around the support level of $647, with a stop-loss order placed at $644 to minimize potential losses. The target price could be set at $674, the resistance level, aiming for a profit of approximately $4%. Additionally, the RSI indicator suggests potential entry points when it dips below $50, indicating oversold conditions. Monitoring the Bollinger Bands can help confirm the trend and identify potential breakouts or reversals. Combining these strategies can help create a more robust and informed trading approach. Based on the provided data, Stellar appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a range, with support around $0.312 and resistance at $0.406. The forecast data suggests continued consolidation with potential for a slight upward movement. Considering the RSI, we can identify potential entry points when the indicator dips below $30, indicating oversold conditions. A buy order can be placed around $0.312, with a stop-loss order set at $0.308 to limit potential losses. The target price can be set at 35 cents, aiming for a $12% profit. Monitoring the Bollinger Bands can further confirm the entry and exit points. A breakout above the upper band could signal a strong bullish momentum, while a drop below the lower band might suggest a potential downtrend. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, while showing some fluctuations, remains below $30, indicating oversold conditions. The Bollinger Bands are also narrowing, suggesting a potential for a breakout in either direction, but the overall trend points downward. Therefore, a short position strategy is recommended. Enter a short position at the market price when Toncoin reaches the resistance level of $3.86. Set a stop-loss order at $3.94 to limit potential losses. The target price for this trade is $3.17, based on the forecast data and the downtrend. This strategy capitalizes on the oversold conditions and the potential for a further price decline. Remember, this is a speculative strategy and carries inherent risks. Based on the provided data, Cardano appears to be in an uptrend. The historical price data shows a consistent upward movement, with the price breaking above resistance levels. The forecast data also suggests continued upward momentum. Support levels are relatively stable, further indicating a bullish trend. Therefore, a long position is recommended. Enter the market at the current price of $0.775. Set a stop-loss order at $0.683, the identified support level. The target price should be set at $0.809, the recent resistance level. This strategy leverages the upward trend and aims to capture potential gains while minimizing risk. Based on the provided data, Litecoin appears to be in a bullish trend. The historical price data shows a consistent upward movement, with the price breaking above the resistance level of $136 on several occasions. The forecast data further supports this bullish outlook, predicting continued price increases in the coming week. Considering these factors, a long position in Litecoin is recommended. A suitable entry price would be around $128, which is close to the predicted price for February 20th. The stop-loss order should be placed at $122, below the recent support level, to limit potential losses. The target price can be set at $139, which is the upper boundary of the Bollinger Bands and represents a potential price target for the bullish trend. This strategy utilizes the combination of trend analysis, support and resistance levels, and Bollinger Bands to identify a potentially profitable trading opportunity. Based on the provided data, Doge-Coin appears to be in a short-term downtrend. The historical price data shows a gradual decline, and the forecast data suggests this trend might continue in the coming week. The RSI is currently hovering around $40, indicating neutral momentum, but it has been trending lower, suggesting potential for further downward movement. Therefore, a bearish strategy could be implemented. Enter a short position at the current market price, around $3.22, with a stop-loss order placed above the recent high of $3.55. This stop-loss level should protect against any unexpected upward price movement. The initial target price could be set at the support level of $3.06, which has been tested several times in the past. If the price breaks below this level, the target price could be adjusted further down to the forecast low of $2.81. Remember to carefully manage your risk and adjust your strategy as needed based on market developments. Based on the provided data, Aptos appears to be in a sideways trend with a slight upward bias. Historical price action shows consistent support around $5.83, while resistance sits at $8.38. The forecast data suggests a potential pullback in the short term, with prices hovering around the support level. A suitable strategy would involve a long position entry at $5.83, with a stop-loss order placed at $5.70 to manage risk. The initial target price could be set at $6.20, aiming for a 5% return. This strategy aligns with the RSI indicator, which is currently hovering around $30, indicating potential oversold conditions. Additionally, the Bollinger Bands suggest a potential price bounce as the price is approaching the lower band. The overall strategy aims to capitalize on the potential upward momentum while mitigating risk through a defined stop-loss order. Based on the provided data, SE appears to be in a sideways trend with a slight upward bias. The historical data shows price fluctuations within a defined range, with support at $0.221 and resistance at $0.242. The forecast data suggests a potential pullback in the short term, but the overall trend remains positive. Considering these factors, a suitable strategy would be to enter a long position at $0.216, the predicted price on February 20th. The stop-loss should be placed at $0.211, below the support level and the predicted price on February 21st, to minimize potential losses. The target price could be set at $0.242, the resistance level, aiming for a potential profit of approximately $12%. This strategy incorporates both technical analysis and fundamental outlook, aiming to capitalize on the potential upward momentum while managing risk effectively. Based on the provided data, Ethereum Classic appears to be in an upward trend. The historical price data shows a consistent increase over the past 2 weeks, with support holding firmly at $20.20. The forecast data also suggests continued upward momentum. Considering these factors, a long position could be initiated. A suitable entry price would be around $20.40, near the recent support level. The stop-loss order should be placed below the support at $20.20 to minimize potential losses. The target price could be set at $20.70, aligning with the forecast and recent price highs. This strategy leverages the upward trend and potential for further price appreciation. Based on the provided data, Polygon appears to be in a sideways trend with potential for upward movement. The historical data shows price fluctuations within a defined range, while the forecast data suggests a slight dip followed by potential recovery. The RSI indicator oscillates between oversold and neutral zones, indicating a lack of strong momentum in either direction. Therefore, a cautious approach with a defined risk management strategy is recommended. A long position can be considered if the price breaks above the resistance level of $0.33. The entry price would be 33 cents dollars, with a stop-loss order placed at 30 cents dollars to limit potential losses. The target price could be set at 35 cents dollars, aiming for a $6% profit. This strategy utilizes the potential for upward movement while mitigating risk through a defined stop-loss. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is hovering around oversold levels, suggesting potential for a short-term bounce. However, the overall trend and forecast point towards a bearish outlook. Therefore, a short position could be considered. The entry price should be around $0.155, which is slightly above the current price and the recent support level. The stop-loss should be placed at 16 cents, above the entry price to limit potential losses. The target price could be set at 12 cents, based on the forecast data and the downtrend. This strategy relies on the assumption that the downtrend will continue and the price will fall towards the predicted levels. Based on the provided data, optimism appears to be in a slight uptrend. The price has been generally increasing over the past 2 weeks, with a notable upward movement in the last few days. The forecast data suggests a potential correction in the coming week, with prices dipping slightly. Considering the support price of $1.09 and the forecast lows, a good entry point could be around $1.09. A stop-loss order should be placed below the recent support level, at $1.08, to limit potential losses. The target price could be set at $1.15, based on the recent high and the potential for a continued upward trend. Additionally, the RSI indicates that the asset is not currently overbought or oversold. The Bollinger Bands suggest a potential for price volatility in the coming week, but the price is currently trading within the bands. This strategy focuses on capitalizing on the potential upward trend while managing risk with a defined stop-loss order. Based on the provided historical and forecast data, STRK appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast indicates a further decrease in the coming week. The support price of $0.221 provides a potential buying opportunity, while the resistance price of $0.234 acts as a ceiling for upward movement. A buy position can be initiated at the support level of $0.221 with a stop-loss order placed at $0.219 to limit potential losses. The target price for this trade is set at $0.234, representing the resistance level. This strategy leverages the potential for a bounce off the support level and a subsequent break above the resistance. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue. The RSI, currently at $30.40, is significantly oversold, indicating potential for a short-term bounce. However, the price is also approaching the strong support level of $162, which could provide a buying opportunity. Therefore, a long position could be initiated at the entry price of $168. The stop-loss order should be placed at $162 to limit potential losses. The target price is set at $177, based on the forecast data and the potential for a short-term rebound. This strategy utilizes the oversold RSI and the support level to identify a potential buying opportunity in a downtrend. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is hovering around the neutral level, suggesting a potential for further downside. The Bollinger Bands are contracting, indicating a period of consolidation before a potential breakout. Considering these factors, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.750. The target price is set at $0.650, based on the support level and the projected downward trend. Monitor the RSI closely for any signs of oversold conditions, which could potentially trigger a short-term rebound. However, maintain the bearish outlook and adjust the stop-loss accordingly if the price moves against the position. Based on the provided data, Render appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping from $4.19 to $4.18. The forecast data further supports this bearish outlook, predicting a continued decline to $3.71. Therefore, a short position would be the most appropriate strategy. A suitable entry price for a short position would be around $4.18, the current support level. A stop-loss order should be placed at $4.38, slightly above the recent high, to limit potential losses. The target price could be set at $3.71, the lowest forecast price. This strategy leverages the downtrend and uses technical indicators like RSI and Bollinger Bands to identify potential entry and exit points. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicates that the asset is oversold, suggesting a potential for a short-term rebound. However, the overall trend suggests a bearish outlook. Therefore, a short position is recommended. Enter a short position at the market price when the price reaches $0.139. Set a stop-loss order at $0.146 to limit potential losses. The target price for this trade is $0.129, which aligns with the forecast data and suggests a reasonable profit target. This strategy combines the bearish trend with the oversold RSI signal to identify a potential entry point for a short trade. Based on the provided data, Doge-Coin appears to be in an upward trend. The historical price data shows a gradual increase, with the forecast data suggesting continued growth. The RSI indicates that the asset is not overbought, currently hovering around $38. Therefore, a bullish strategy is recommended. We can enter a long position at the current market price of $0.255. A stop-loss order should be placed at $0.246, which is the support level and the lowest forecast price. The target price can be set at $0.276, which is the upper Bollinger Band for the next week. This strategy utilizes both the upward trend and the potential for price expansion indicated by the Bollinger Bands. Based on the provided data, PEPE appears to be in a sideways trend with a slight downward bias. The historical data shows a consolidation range between the support price of $0.000000930 and the resistance price of $0.000000960. The forecast data suggests a continuation of this trend with prices potentially dipping below the support level. A suitable strategy would be to wait for a price drop below the support level of $0.000000930 and enter a short position. The stop-loss order should be placed above the recent high of $0.000000960, acting as a safeguard against unexpected upward price movements. The target price could be set at the next significant support level, which might be around $0.000000840 based on the forecast data. This strategy utilizes the combination of trend analysis, support and resistance levels, and price forecast to identify a potential short selling opportunity. Based on the provided data, SHIB shows a potential for upward movement. The price has been generally trending upwards, with support holding strong at $0.0000152. The forecast data also suggests a continued upward trajectory, with prices predicted to rise in the coming week. Therefore, a bullish strategy is recommended. Enter a long position at $0.0000152, with a stop-loss order placed at $0.0000148 to manage risk. The initial target price is set at $0.0000167, the recent resistance level. This strategy leverages the potential upward momentum while incorporating risk management measures. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, while showing some fluctuation, remains below the overbought level of $80, suggesting that the asset is not currently overvalued. The Bollinger Bands are narrowing, indicating a potential period of consolidation before further price action. Given these factors, a short position strategy is recommended. Enter a short position at the opening price on February 20th, $0.479. Set a stop-loss order at $0.524, slightly above the forecast high for the day. The target price should be 38 cents, based on the forecast low for the week. This strategy capitalizes on the anticipated downtrend while managing risk with a well-defined stop-loss. Based on the provided historical and forecast data, Altcoin appears to be in a sideways trend with a slight bearish bias. The support and resistance levels suggest a consolidation phase between $0.00255 and $0.00315. Given this context, a conservative strategy could involve entering a short position when the price reaches the resistance level of $0.00315. The stop-loss should be placed at $0.0032, allowing for a small buffer above the resistance. The initial target price could be set at the support level of $0.00255, aiming for a potential profit of $0.0006. This strategy incorporates the price action, trend analysis, and support/resistance levels to identify a potential short opportunity. Based on the provided data, Near Protocol appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a range, with support around $3.14 and resistance at $4.72. The RSI indicates that the asset is not overbought or oversold, hovering around neutral levels. The Bollinger Bands suggest a narrowing range, potentially indicating a period of consolidation before a potential breakout. Given these observations, a strategy could involve a long position entry at $3.18, with a stop-loss order placed at $3.14 to limit potential losses. The target price could be set at $3.55, based on the recent high and the upward trend. This strategy utilizes the support level as a risk management tool and aims to capitalize on the potential for a breakout above the recent resistance level. Based on the provided data, Internet Computer appears to be in a sideways trend with a slight upward bias. While the historical data shows a general upward movement, the recent forecast data suggests a potential pullback in the coming week. The RSI oscillates around the neutral level, indicating neither strong bullish nor bearish sentiment. Considering these factors, a cautious long position could be initiated. The entry price would be around $6.76, coinciding with the strong support level. The stop-loss order should be placed at $6.59, below the recent lows and the bottom Bollinger Band. The target price could be set at $7.39, representing a potential upside based on the recent highs. This strategy aims to capitalize on a potential rebound from the support level while managing risk effectively. Based on the provided data, Injective appears to be in an upward trend. The historical price data shows a consistent increase, with the price moving above the support level of $13.90 on most days. The forecast data also suggests continued upward movement. Therefore, a long position in Injective is recommended. A suitable entry price would be around $14, with a stop-loss order placed at $13.90 to limit potential losses. The target price could be set at $15.30, representing the resistance level and a potential profit of 9%. This strategy capitalizes on the upward trend while managing risk through a defined stop-loss. Based on the provided data, BTC exhibits an overall upward trend. The historical price data shows consistent gains, and the forecast data predicts continued growth. The support level at $417 reinforces this bullish outlook. Considering the RSI, which currently stands at $55.1, the market is in an overbought condition. However, the recent price action suggests potential for further upside. Therefore, a long position could be considered. A suitable entry price would be around $385, slightly below the current price, allowing for a potential pullback before entering the trade. The stop-loss order should be placed at $370, which is below the recent support level and the $50 day moving average, mitigating potential downside risk. The target price could be set at $453, representing the resistance level and potential profit target. This strategy capitalizes on the upward trend while managing risk through a well-defined stop-loss order. Based on the provided data, THETA network appears to be in a downtrend. Historical prices show a consistent decline, with the forecast data predicting further drops. The RSI, while fluctuating, generally remains below $50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential for a break in either direction. Given these factors, a short position strategy is recommended. Enter a short position at the current market price, which is $1.33. Set a stop-loss order at $1.36, above the recent resistance level, to limit potential losses. Aim for a target price of $1.19, based on the forecast data. This strategy leverages the downtrend and bearish indicators, aiming for a profit from the expected price decline. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, hovering around $30, indicates that the asset is oversold, suggesting a potential for a short-term rebound. However, the declining Bollinger Bands suggest continued downward pressure. Therefore, a cautious approach is recommended. A potential strategy would be to enter a short position at the opening price on February 20, 2025, $1.05. The stop-loss should be placed at $1.08, allowing for a small buffer above the entry price. The target price could be set at $0.979, based on the first forecast price. This strategy leverages the oversold RSI and the downtrend, but the stop-loss is crucial to mitigate potential losses if the rebound is stronger than anticipated. Analyzing the provided data, Hooked Protocol appears to be in an upward trend. Historical prices show a consistent rise, with support around $0.198 and resistance at $0.218. The forecast data further suggests this upward momentum, with prices predicted to increase over the next week. Based on this, a long position strategy is recommended. A suitable entry price would be around $0.198, the established support level, providing a good risk-reward ratio. A stop-loss order should be placed at $0.195 to limit potential losses. The target price could be set at $0.218, the resistance level, aiming for a potential profit of approximately $10%. Additionally, the RSI indicator, currently around $38, suggests the asset is not overbought and further upward movement is possible. The Bollinger Bands also support this view, with the price oscillating within the bands and showing potential for upward breakout. Based on the provided data, Artificial Superintelligence Alliance appears to be in a sideways trend with a potential for downward movement in the coming week. The historical price data shows a range-bound pattern with support around $0.559 and resistance at $0.725. The forecast prices suggest a decline, further supporting this bearish outlook. Therefore, a short position strategy is recommended. Enter a short position at the market price around 77 cents, close price of February 19. Set a stop-loss order at 79 cents, above the recent resistance and the high of the forecast week, limiting potential losses. The target price for this trade is 65 cents, based on the forecast low for the week. This strategy leverages the potential for a downward price movement while managing risk with a well-defined stop-loss. Polkadot exhibits a clear upward trend based on the historical data, with the price consistently increasing over the past 2 weeks. The forecast data also suggests continued upward momentum, supporting this trend. The support and resistance levels further reinforce this view, with the price consistently finding support near the $4.77 level and resistance near the $5.16 level. Therefore, a buy position is recommended with an entry price around $4.77. The stop-loss price should be set at $4.65 to limit potential losses. The target price is set at $5.16, aiming to capture the resistance level. Additionally, the RSI indicator suggests that Polkadot is not overbought, providing further support for a bullish stance. The Bollinger Bands show that the price is trading within the bands, suggesting a continuation of the current trend. Based on the provided data, Altcoin appears to be in a sideways trend with a slight upward bias. The historical price action shows fluctuations within a defined range, with support around $3.31 and resistance at $3.52. The forecast data suggests a potential pullback in the coming week, with prices dipping below the support level. Considering these factors, a cautious long position can be initiated. Enter a long position at $3.31, the support level, with a stop-loss order placed at $3.23, slightly below the recent lows. The target price is set at $3.52, the resistance level, aiming to capture the potential upward move. This strategy utilizes the support level as a potential entry point and incorporates risk management through a stop-loss order. Based on the provided data, Conflux appears to be in an upward trend. The historical price data shows a consistent increase, and the forecast data suggests this trend will continue. The support level of $0.113 provides a strong base for this upward movement. A potential entry point for a long position would be around $0.114, as this price point is near the recent support level and the predicted forecast price. A stop-loss order should be placed at $0.112 to limit potential losses. The target price could be set at $0.118, which is a resistance level based on historical data. This strategy combines the upward trend, support level, and resistance level to identify a potentially profitable trade. Based on the provided data, Ethereum name service appears to be in a consolidation phase with a slight upward bias. The historical price data shows a range between the support level of $25.1 and the resistance level of $27.30. The RSI indicator fluctuates around the neutral level, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively narrow, indicating low volatility. Considering these factors, a potential strategy could involve a long position with a buy order placed at $25.60, the midpoint between the support and resistance levels. The stop-loss order should be set at $25, below the recent support level, to limit potential losses. The target price could be set at $27, aiming for a profit of approximately 5%. This strategy aims to capitalize on a potential breakout from the consolidation range while managing risk effectively. Based on the historical data and forecast, Avalanche appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast indicates further downward movement. The RSI is currently in oversold territory, suggesting a potential for a short-term bounce, but the overall trend remains bearish. Considering these factors, a short position is recommended. Enter a short position at the market price around $24.50 USD. Set a stop-loss order at $25.1 USD to limit potential losses. The target price for this trade is $20.50 USD, based on the forecast data and the support level around $20.70 USD. This strategy combines the bearish trend with the oversold RSI, aiming to capitalize on the potential continuation of the downtrend. Based on the provided data, Doge-Coin appears to be in a sideways trend with a slight downward bias. While the forecast prices suggest a potential drop, the historical data shows support around $0.0316. A strategy could involve entering a long position if the price bounces off this support level. A reasonable entry price would be around $0.0318, with a stop-loss order placed at $0.0316 to limit potential losses. The target price could be set at $0.035, aiming for a potential $10% gain. Additionally, we can incorporate the RSI indicator. Buying when RSI dips below $30 and selling when it rises above $70 can signal potential entry and exit points. However, given the current RSI levels hovering around $35, waiting for a stronger dip below $30 might be more prudent. Finally, the Bollinger Band suggests volatility, but the price is currently trading near the lower band, indicating potential for a bounce. Therefore, a combination of these strategies, focusing on support levels, RSI oversold conditions, and the potential for a bounce from the lower Bollinger Band, could provide a well-rounded approach to trading Bitcoin. Based on the provided data, PENDLE appears to be in a slight uptrend. The historical price data shows a general upward movement, with the price bouncing off the support level of $3.23. The forecast data also suggests a continued upward trend, although with some potential for consolidation. Therefore, a long position strategy could be implemented. A buy order should be placed at the entry price of $3.19, which is the first forecast price. The stop-loss price should be set at $3.23, the support level, to limit potential losses. The target price could be set at $3.38, the second forecast price, for a potential profit of approximately 2.8%. This strategy leverages the potential for continued upward momentum while managing risk through a defined stop-loss order. Based on the provided historical and forecast data, the sandbox appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with a forecast indicating further downward movement. The support price of $0.36 acts as a potential floor, but the RSI indicates oversold conditions, suggesting a potential for a short-term rebound. Therefore, a contrarian strategy could be employed, aiming to capitalize on a potential bounce from the oversold level. A buy position could be initiated at the entry price of $0.36, with a stop-loss order placed at $0.35 to limit potential losses. The target price could be set at $0.38, aiming to capture a 5.56% profit. This strategy combines the oversold RSI signal with the support level, aiming to profit from a potential short-term rebound within the downtrend. Monitoring the price action closely and adjusting the stop-loss accordingly is crucial to managing risk. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.314 on several occasions. The forecast data also suggests a continuation of this downtrend, with the predicted prices consistently below the current market price. Therefore, a bearish strategy is recommended. A short position can be initiated at the market price of $0.318, close price on February $19, $2025. The stop-loss order should be placed at $0.329, which is the recent high point. The target price is set at $0.277, the lowest predicted price in the forecast data. This strategy aims to capitalize on the expected decline in Decentraland's price. Based on the provided data, ENG coin appears to be in an upward trend. The historical price data shows a consistent increase, with support holding around $0.116. The forecast data also suggests continued growth, although with some potential for short-term fluctuations. A long position could be considered with an entry price around $0.118, a stop-loss at $0.114 to protect against a reversal, and a target price of $0.125. This target is based on the resistance level of $0.128 and the anticipated upward momentum. The RSI indicator, currently around $39, suggests the asset is not overbought or oversold. The Bollinger Bands show price action within the bands, indicating potential for continued consolidation or sideways movement before a further upward break. Combining these indicators with the trend analysis, a long position with the aforementioned entry, stop-loss, and target prices appears to be a promising strategy. Based on the provided data, Uniswap appears to be in a slight uptrend. The price has been generally increasing over the past 2 weeks, with support around $8.99 and resistance at $10. The RSI indicator suggests that the asset is not overbought, hovering around $40. The Bollinger Bands are narrowing, indicating a potential for a breakout in either direction. A potential strategy could involve a long position entry at the current price of $9.61, with a stop-loss set at $8.99 to protect against a reversal. The target price could be set at $10, the resistance level, aiming for a 3.9% profit. This strategy utilizes the upward trend, support level, and potential breakout of the Bollinger Bands. It's important to note that this is just a suggestion, and further analysis and risk management considerations are always recommended before making any investment decisions. Based on the provided data, Chainlink appears to be in a sideways trend with a slight downward bias. The historical price action shows a range between the support price of $17.90 and the resistance price of $18.40. The RSI indicator fluctuates within the neutral zone, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively tight, indicating low volatility. Given this analysis, a conservative strategy could involve waiting for a price breakout above the resistance level of $18.40. A buy order could be placed at $18.50 with a stop-loss order set at $17.90 and a target price of $19.50. This strategy capitalizes on a potential upward move while mitigating risk by setting a tight stop-loss order. Based on the provided data, Aave appears to be in a bullish trend. The price has been consistently rising over the past 2 weeks, with support holding strong at $239. Looking at the forecast data, the price is expected to continue its upward trajectory, albeit with some minor fluctuations. The RSI indicator suggests that the asset is not currently overbought, with values remaining below $80. Therefore, a long position is recommended. A suitable entry price would be around $253, based on the recent price action and the forecast. A stop-loss order should be placed at $239, protecting against a potential reversal. The target price could be set at $264, aligning with the recent resistance level and the bullish forecast. This strategy capitalizes on the upward trend while managing risk effectively. Based on the provided data, EOS appears to be in an uptrend. The historical price data shows a consistent upward movement, supported by the rising RSI and the fact that the price has consistently stayed above the support level of $0.614. The forecast data also suggests continued upward movement, with prices predicted to be above the current level. A potential entry point could be around $0.632, a price point near the recent lows and supported by the forecast data. A stop-loss order should be placed below the support level at $0.614 to limit potential losses. The target price could be set at $0.665, the recent resistance level, which represents a potential 5% gain. The RSI strategy suggests buying when the RSI falls below $30, indicating oversold conditions. The Bollinger Band strategy suggests buying when the price bounces off the lower band. However, the RSI strategy is less reliable in this case as the RSI has been hovering around $40, not indicating extreme oversold conditions. The Bollinger Band strategy could be more effective, but it's important to note that the Bollinger Bands are wide, suggesting high volatility. Therefore, the most efficient strategy in this case appears to be the trend-based strategy, taking advantage of the apparent uptrend and the support/resistance levels. Based on the provided data, Tron appears to be in a sideways trend with a slight upward bias. The historical price action shows consolidation between the support level of $0.232 and the resistance level of $0.243. The RSI oscillates between $44 and $54, indicating neither overbought nor oversold conditions. The Bollinger Bands are relatively tight, suggesting low volatility. Given these observations, a conservative strategy would be to enter a long position when the price breaks above the resistance level of $0.243. The entry price would be $0.243, with a stop-loss set at $0.232, the previous support level. The target price could be set at $0.263, which is the upper Bollinger Band. This strategy capitalizes on the potential upward momentum while mitigating risk by placing a stop-loss below the recent consolidation range. Based on the provided data, Suncoin appears to be in a sideways trend with a slight upward bias. The historical price data shows consolidation around the support level of $0.0185, with resistance at $0.0198. The forecast data suggests a potential dip towards the support level before a possible upward move. Considering the RSI, a long position could be initiated when the RSI crosses above $40, indicating a potential shift from oversold conditions. The entry price would be around $0.0187. A stop-loss order should be placed below the recent support level at $0.0185 to limit potential losses. The target price could be set at $0.0198, the nearest resistance level. The Bollinger Bands suggest that the price is currently trading within the lower band, indicating potential for a breakout. However, it's crucial to confirm this breakout with a strong price move and volume increase.